Thank to Mark because introduced a lot of topics and food for thought, let me say. First of all, good morning to all of you. It's a pleasure to be here and to discuss with you of what is happening in Europe with regard the transposition of PSD2. I will not touch base the regulatory aspect of the transposition. My aim is just to give you a flavor of the business opportunity that there is inside the PSD2, and I'm quite happy of the previous speech because sometimes consultants are seen as unlucky seer of what happened in the market, and so the consultants in general highlight risks and threat for banks or for the financial industry. But as you can see in the previous speech, there is a lot of concrete stuff that are already in place, not just, let me say, a dream of some fintech of weird entrepreneurs, but really it's in concrete, and a big giant in the banking space has already put in place something. I don't want to go through all the slides because some of the topic has been already touched during the previous presentation. Just to review a little bit that we believe as PwC assisting our clients, assisting a lot of banks and also financial institutions in this particular moment where there are four forces that are affecting the transformation of the financial industry. We realize that nowadays PSD2 it's a real game changer and can get a boost to the digital transformation of the industry. Absolutely. I started to work in payments more than 15 years ago. I'm a 25 years old guy with 20 years of experience. And when I started to work in the payment industry, I recognized that payments was considered quite ancillary for banks because credit was the giant in the profit and loss, and the credit, let me say, gave all the profit to the balance sheets of the banks. Nowadays, the situation is quite different due to the regulation constraint and due to the risk that any banks have to bear, let me say, getting and managing credit business. That's the reason, and this is another angle to say the position of the bank, because in general, most of the speakers or slide that you can find on internet discuss of the financial institution disruption and also the threat for banking industry. But I can say that the GAFA, Google, Amazon, Facebook, and so on are not interested in credit industry and banking industry itself, because probably you can understand that with the profit of a quarter of this big giant, they can buy the first bank in the world, no problem for them. But they are not interested in entering in that business. That's why they don't have already both bank. They are more interested in understanding how to complete the experience for their customer. And payments is the first step to integrate in the value chain of their business, the last step in order to complete the customer experience, because the payments give them a lot of information related to the customer, how the customer behaves. That's why we believe that now payments are in fashion, not just because it's managing a lot of volumes of transaction, but because behind a transaction of €1, there is more value due to the fact that now you can understand who is the payee, who is the payer, understanding the information behind the transaction. And there is more value of €1 with respect to the single transaction of just €1.
So that's why you're saying that the big technology players, because they need the data of how the users behave, that's what you're saying more or less?
Yeah, this is one of the starting points in order to develop value-added services. As Mark already said, it's not just the transaction itself that can complete the value chain of purchase for Amazon. As probably you know, Amazon, understanding the information behind the transaction of their client, understanding what the seller and the buyer are doing, the time, the stocks, and so on in their marketplace, also launched a credit service, a specific credit service for seller in order to supply them with financing the seller with the right amount of money that they need to sustain the working capital of that seller. So based on the information that they can manage. That's the value that in the bank there is nowadays that they leverage on. But PSD2 is, as I mentioned, is a game changer. This is the second version of the PSD. I started to assist banks in Europe with the PSD1, but the regulator with the PSD1 introduced a new, the payment institution in order to open up the payments market and to let third party to enter and create alternative to traditional player. Unfortunately, when more or less 10 years ago, the regulator started with PSD2, he had a good vision, but the market in that moment was not ready. And so the position has not really changed 10 years ago. Nowadays, what's happened with respect in the past, that the technology creates really a boost in the market. Customer experience already changed due to the fact that the behaviors of the consumer changed. And the regulator with the PSD2 is now trying to close the gap because in the market already are in place some customer experience and some examples of distinctive approach to the payments. And so the regulator now is trying to close the gap. So also it's not an easy job for the regulator right now because it's difficult to stay at the pace of the technology and the evolution and the innovation. We will discuss briefly of the state of play of the PSD2 in different countries around Europe, and as you may know, most of the countries in Europe have already transposed the regulation. In Greece, if I'm not wrong, you are approaching the transposition in May, June. And inside the regulation, there are a lot of opportunities, as in concrete, Mark has already presented, but we want to highlight that there are other, let me say, rooms in order to create effective business for customer and create value-added services. I don't want to spend too much time with the regulatory
I think most
framework.
people really know about that. So.
Yeah, exactly. And as I mentioned, PSD2 compliance is almost done. What we have to do is to work in the PSD2 tech space because the regulatory technical standard that can create in concrete the environment to exchange information between banks and third party will be live in September 2019, as probably you know, and also discuss of business opportunity because this is the right moment to understand if there is an opportunity in the market and how to partner with fintech. Fintech are not a threat, I believe, and as a firm, we assist a lot of our clients understanding how to partner with fintech because looking for the pain perspective, there are two pains. From one side, there is banks that are recognizing partnering with fintech that are not able to sustain the innovation and the technology. That's why they need to partner and to have a conversation with fintech. And from the other side, we have fintech that they stay at the cutting edge of the innovation and technology, but they don't have the critical customer base in order to sustain their business. So this could be the two ingredients for a good deal. Also for the small and medium banks, because if you consider that it's clear technology it's for everyone, the cost of the technology has been reduced in the recent year, but you need not just technology, but you need investment in people that are able to manage technology, people that is able and skilled to manage new competencies and has the right capability to make innovation inside the financial services industry, and also make investment to integrate different solutions. So we believe that it's a good deal to discuss with fintech instead to compete against them. Here, the three topics that I mentioned, just a few words on the business opportunity and the PSD2 tech wave that is coming. PSD2 tech wave is not just a matter of how to implement the best technology stack, but is also to understand how to cope with different type of regulation that enable the banks to interchange information with third party and with other banks, but also it's a matter of understand how to manage the information and the data of the customers. As probably you know, there is other regulation, privacy regulation. There is also GDPR that is coming to the force that you have to cope with and combine, understanding the clear vision, how to use the data of your customer. Because inside the PSD2 is just the prescription that you can use the information of the customer only for payments purposes. In case you want to make a step ahead with respect the payment purposes, you have to manage the consent of the client, understanding how to let me say, manage the prescription of the GDPR and also manage the prescription of the privacy consent. And the combination of this lets the bank to create value-added services managing the data of the customer. Because for the regulation, for PSD2 regulation itself, you can just aggregate the information and show to the final consumer, the consolidated situation of two different accounts, but the bank cannot use this information without a specific consent that is not in the PSD2 regulation, but in other regulations. And also, you can initiate a payment using a payment initiation service provider, but you cannot use the information related to this payment transaction without a specific consent of the consumer. So it's important also to manage regulatory aspect, technology aspect, and also understanding clearly what's the business perspective that the banks has and what's the role that the bank want to play in this new market. We have already discussed of the business opportunity. Here is the result of the survey that we submitted to the major banks, the 40 major banks in Europe. So these figures reflect their vision, but later in the presentation you can see that there's no divergence with the vision of other small and medium players in the market. All of the players said that PSD2 is really an opportunity and not just a compliancy project. In particular, when we asked what kind of project they have in place, most of the bank replied that it's a project to be compliant, but also to identify a possible strategic position in the payments market. To be clear, payments is a volume business, so it's difficult to imagine that small and medium banks can get benefit or can, let me say, create revenues just using the volume of the transaction. What there is behind of the transaction, as I mentioned, is the information that you can get and the value-added service that you can build on completing the value chain for the consumer or for the small and medium enterprise, just to give you another example of segment that could be covered in terms of payment services. And as you can see, also looking at the other answer, a lot of players also said that it's an opportunity to develop new product and new services. Here is the position matrix that we use to start a conversation with our client, understanding what kind of possible position they see for them in this environment. In particular, on the x-axis, you can see the data openness. That means the willingness of the financial institution, the bank of the player, to open up their IT infrastructure or to use their infrastructure to leverage on the information that they have inside or that they can get from other players in the market. So from the law that is very close to the minimum level of requirement that you can find in the regulation to the high level, that means the opportunity to monetize the data and the information that you have inside your organization. On the y-axis, you have the value-added services, starting from low, the minimum level of services that are described in the regulation, like account information service provider, the open IT infrastructure to the access of third parties, payment initiation service provider. What is it in the prescription of the regulation? To the high level, where is the value-added services developed, understanding all the customer needs.
So platform aggregator is the one that you think that will be the most innovative, right? If a bank can transform itself to
there is a specific, there is a specific start to give you the answer to this question, that this represents the answer of the major banking group in Europe. So it's quite easy to understand why 50% of the respondents position themselves. This is their vision at the date of the survey. They position themselves as a platform as aggregator. Platform as aggregator is the bank that want to leverage on their IT infrastructure, robust IT infrastructure, leverage on their capabilities in terms of innovation capabilities, data analytics capabilities, and also people that are able to create innovation inside the organization, and also to coverage a lot of segment of their customer base. And typically there you can find banks like Intesa Sanpaolo, HSBC, Royal Bank of Scotland. Let me say all the global transaction banker are positioned themselves there in the main quadrant. There are also big banks like BBVA or UniCredit that are positioned themselves as a platform. It has been very interesting, the conversation that we had with BBVA and UniCredit guys, because they said, we recognize that as a banking industry, it's difficult for us to stay at the pace of the innovation in terms of customer experience. There'll be a lot of fintech that is going to jump in our market and are more superb in terms of experience, the digital customer experience with respect to our capability. So they understood that the key success factor for them is to leverage their IT infrastructure in order to create an environment that can host fintech and host other players, and leveraging on their IT infrastructure because it's robust, is compliant to the financial sector, and they can thinking of how to sell services based on their IT infrastructure. BBVA is a quite famous example, already developed an API environment where the fintech can develop their business model using also the information of BBVA. Also UniCredit thinking of this and servicing some small financial institution and small payment institution. There are few banks, but this is the position also of small banks that declare that they want to stay just compliant and respect the regulation, but stay in the position to be compliant. That means that at the end of the day, if they don't react and so they have a passive approach. At the end of the day, they can bear the risk to become, let me say, a savvy pig bank. Because at the end of the day, if I can find as a consumer a superb customer experience, a fantastic or design app that can able to aggregate my account, my different account, or can create a superb experience just for mine account, my bank could be disintermediated directly from this other app and from different customer experience. That's why Mark said it's important to invest in customer experience. We believe that customer experience is one of the key aspects for succeeding in this scenario. But it's not just the only factor. You have also to consider innovation capability, and sometimes banks are not able, not to, let me say, disruptive in saying this, but because sometimes banks have to manage with compliance, have to manage with the day-by-day business, have to manage with the customer's issue, and they have not enough time to integrate and to change culture, to be open up to the innovation. That's why ING and other big banks create separate entities in their banking organization that are, let me say, protected from the traditional banking culture in order to develop innovation. Now is the time of experiment also. So not all this experiment will be succeed. But at the end of the day, from our view, is the right way to progress and make innovation in the banking industry.
So the right way is to have some inside startups, let's put it this way?
This could be one of the possible, depends on the culture of the bank, the starting culture of the banks, and also the way how they think that the innovation is important and they want to be distinctive with respect to other players in the market. Depends also the position that they have in this moment in the payments market, but in the market in general, how they want to cope with the digital transformation. Also depends from the let me say, the goals of the management for the next 3-5 years. But there's no doubt that after 3-5 years, the digital transformation have to be implemented in any organization, or the risk is really to be pulled out of the market. And the aggregator, 30%, more or less 30%, is the position that has the mid-sized bank, that understanding that there is an opportunity to create different value-added services, but they don't have the power. So they partner, for example, with a startup or fintech to create a new service for their customer. Here is a list of possible value-added services that could be created, starting from account information service provider and payment initiation service provider. To be clear with the audience, all of the banks that we have interviewed and that we are assisting are thinking of to create an aggregator account information service provider. So that service will become a commodity at the end of the day. What will be differentiated in our view is to create value-added services on top of this aggregation service. So we believe that, for example, for small and medium enterprises, create a treasury service for the treasurer of the firm, of the companies, could be an opportunity to understand and leveraging on the information that the bank is managing. Aggregation, the situation of the client, understanding what is the treasury position, and create specific, for example, lending offer, as Amazon is doing, for example, analyzing working capital with the information. Social network payments. We are experimenting, partnering with Facebook and partnering with other players in the market, how to create KYC based on the possibility to have the recognition on the credit transfer in general, to recognize the customer on the other side, you can send a credit transfer using the payment initiation service provider through a third party that create the environment to interact. Like
use Facebook account for KYC or
use the interface of Facebook.
In order to
nowadays, Facebook is already prepared and open to use, and the APIs of Facebook are free. And small and medium enterprise, small and medium banks have already developed some service based on Facebook because they recognize that they don't have the power, let me say, the advertising power. They don't have enough brand to create a distinctive approach on the market. So leveraging on the advertising system of Facebook, they are building a new experience, a new digital experience on a specific target using what is already in the market. So here a list of possible service. Here is, because the time is over, here some, in order to conclude, some elements that comes from our tour with all the banks around Europe and the conversation that we had with the management. What we understood is not just a matter of how much you are investing in technology, how much you are doing in hiring people. It's just a matter also of culture. We think that sometimes in banking industry there is a resistance in make a step ahead in the creation a new culture that is more open to the innovation. I understand that for the management, the problem is to close the balance sheet of this year and the next 2-3 years. But if you are too much focused on the short term, at the end of the day, you'll be pulled out from the market by big giants that are already in place, that are working. So there's, let me say, still enough time to decide how to cope with this. And the best way is not just to reinvent the wheel inside the organization, but try to create open ecosystem with other players in the market and leverage on the outside capability, taking this in the organization, working with them, and co-create value-added services for consumers, for clients and customers in general. This is a list of possible. I mentioned, because I know that Mark was here, I mentioned also ENG, but there are a lot of examples in the market that we are working on. And really, just to conclude, the other side of the medal, what the consumer is thinking of. This is the result of the consumer survey that we are going to publish this month, and just a chart to present the fact that the consumer are not willing to pay extra fee for just aggregation service.
Especially in Southern Europe, if I see correctly the numbers, right?
Sorry?
Especially in the Southern Europe, the numbers are really, really low.
From our perspective, we can see that in the Nordic, there is an open-minded to open and share data and information that PSD2 obliges you to do. In particular, what we see that Anglo-Saxon and Nordic banks absolutely embrace this change with enthusiasm, and they open up their bank in order to exchange. They don't see the threat. In opposite, the Latin banks, but the two giants in Spain, the Latin areas, also Italian banks, try to understand with the regulator how to defend their position and not to put in the scope of the regulation some kind of information, some kind of data. Just to give you an example, we are assisting one of the main issuer, card issuer in Europe, is trying to understanding if is it possible to put out of the scope of the regulation the information related to cards. it's clear that in the European legislative view, there is all the information related to payments, and also car is in the scope. And in fact, in UK, absolutely, they open up cards, accounts, and anything that could be, and probably for UK, that will be the first country that will make the second step, also opening the folder of investment in the future, I believe. But nowadays, most of the Latin countries are discussing with the regulator how not to put all the information related to payments in the scope. And I believe this is not the right view to approach this change. Because
but it's the Latin view.
Yeah, also Italian.
Yeah.
Okay. I don't want to spend a lot because the time is really over. You can find also other details in the presentation when.
Okay, thanks very much.
Thank you.